Did you know that some of the world's wealthiest individuals have made their fortune during market crashes and recession? 2025 can be one such year for you that sets the pathway for you to become a millionaire. This is a lifetime opportunity. Don't miss it. In the next 10 minutes, I'm going to explain you how you can make money in this down market and how you can convert this opportunity into the pathway to become a millionaire. One of the legendary investors, Warren Buffett, have said
that when others are fearful, you're going to get scared yourself.
That be fearful when others are greedy and be greedy when others are fearful. This market can be an opportunity of lifetime for you to make the generational wealth that you have been looking for. And so far, if you have watched this video, don't forget to hit like and subscribe to this channel for the YouTube algorithm so that you can get notified whenever I post new videos. Now get back to it. Understanding the market cycles and opportunity. There are three different types of market cycles: bear market, bull market, and recession. We don't know whether we are in bear market or in recession. There are different indicators which suggest we are already in recession. According to JP Morgan, 35% likely we are in recession right now. Historically, individuals and investors who have made billions of dollars in the market have invested heavily during recession. And right now, institutional investors and hedge funds are sitting with pile of cash. They are waiting for crash to happen more so that they can keep buying and dollar cost averaging their portfolio. Now, historical context is past savvy investors like Warren Buffett have bought billions of dollars worth of stock during this recession time or during this bear market. And why? Because they got the opportunity to buy any individual stock or ETFs at the lowest level, at the lowest cost, and that resulted into billions of dollars return over time. And that's exactly what I'm making this video for. As an individual investor, what we can do is we can take also the opportunity of this lifetime. Warren Buffett have done this many years, many times. In our lifetime, we will see 7 to 8 recession or at least down market. And this is one of them. This is one of the opportunity that doesn't come every day. Now in the White House is President Donald Trump. He is a very savvy negotiator. We know that he is someone who will justify his presidency based on the market and based on the returns during his tenure. We know that these tariffs will go away. These are the tactics of negotiation. And many people understand this. And that is why right now the bear market that you are seeing will convert into bull market somehow in next 4 years. So if you believe in the US economy, you have to understand historically that what S&P 500, for example, have returned over time. S&P 500 have been favorite index fund for many of the investors, including Warren Buffett. And he famously said to his family that if I am no more to advise about where to invest, just put your money in S&P 500 and it will outperform most of the hedge funds and individual investors and managed funds. So trust this S&P 500. It actually is a reflection of US economy. Now you see on the screen, peak to tough decline. You can see that all are red. And these are the time when recession happened in the past. And you can see in 2020 also, it was a bear market. It was not officially called recession, but it was a bear market, and similar situation we are seeing right now in 2025. If you look at 1 year post through, you will see the median return is 44.4% with an average of 50.1%. And if you look at 5 year post through, the returns are above 100%. Any downtime in the history have given great returns in the post-through time. So what does that tell you? It tells you that if you put money in the market right now, you will have higher probability that you will be extremely positive in next 5 years. Now, if you see on the screen, I'm talking about the S&P 500 during the period of 2007 and 2020. You can see a lot of bumps. You can see the bumps during the financial crisis in 2007 to 2009. And then again, the market recovered. And it recovered and it went above and beyond the peak time before 2007. And right now we are here in this graph between S&P 500 and 2000s. You can see that during 2020 there was a dip because of coronavirus and pandemic hit. And then again it recovered pretty fast and again it reached new peaks. And right now we are seeing is just a correction. You have to set yourself to become a millionaire. Now you need to identify the key investment opportunities at this downtime. So what are the sectors in which you can focus on? There are blue chip stocks with strong fundamentals and they can outperform the market when it is the right time. Right now, because of sell-offs, many of those companies which have really strong fundamentals have went down, but they will recover. And you need to understand that if you are investing, you should do some market research and understand about the future perspective of that company. Then there is another opportunity for you to invest in dividend-based stocks. What you can do is you can buy at a cheaper level at this point. For example, Coca-Cola, S&P, Apple, and most of the real estate stocks. It can be a new income source for you. Those individuals who are nearing retirement, they can take a bunch of dividend stock for them as an income source going forward. Other than that, you can also think about tech stock with strong fundamentals. You know that in this present world, people talk about artificial intelligence and quantum computing. Companies who are heavily invested in such technology and have performed well and have good finances, you can invest in them as well. Now, the third thing I can think of is gold and precious metals. During recession and bear market, majority of people like to buy gold because gold is such an asset where the value doesn't depreciate as fast as other assets. For example, your stocks can be very cheaper during the down market, but gold will not go that cheaper. The other thing I can think about is leveraging the low interest rates. During any recession and bear market, majority of time what happens is that central bank and Feds go and reduce the interest rate, and this has happened in 2020. You have seen that so many people became wealthy during 2020 because they leveraged the low cost of borrowing money. With borrowing money, you can buy businesses or you can invest in businesses and get higher return over time. So this is an opportunity of lifetime for you as well. And we will see in coming future that probably there are high chances that Feds and central banks will reduce the interest rate so that people can borrow money easily and recession can be avoided. So you need to understand the value of investing. If you are purchasing stocks at this stage, which is undervalued and at cheaper level, this can lead to generational wealth. This will set a pathway for you to become a millionaire. It is very crucial for you to understand about different aspects of investing. For example, you should understand about when you can time the market, when you can invest on dollar cost averaging, when you can think about dividend stocks, when you can think about buying businesses or investing in businesses. These are all part of financial knowledge and financial learning, and that is why I'm making this video after all. This is like going on a Black Friday sale. You have everything on the cheaper side and you can just go and buy them. But at the same time, you have to put money on the right places, not on the wrong places. And also take in consideration dollar cost averaging. What does that mean? When the market goes down, you keep buying small amount so that you can actually lower the overall cost for that individual stock or that ETF or whatever you have purchased investment. In that way, you will be able to lower the average cost of your investment. If you are investing in S&P 500, keep buying in a lower amount. So this is how dollar cost averaging works. And if you ask me, what I have done is I have increased my contribution to my 401k by 5%, and I have increased my individually after taxes, what I put my money in investment, I have increased by another 5%. So any money that I have other than emergency fund, I try my best to put them into the market right now because this is a wholesale of market. This is a Black Friday sale for me. And I want you to understand this. When everyone is afraid, you should take this opportunity. I have repeated this so many times so far. And the last thing I want to talk about in taking advantage of this opportunity is focus on quality, not quantity. It's not about how many stocks you buy. It's about the quality of the stock that you're buying. What are the potential of that stock to go up in the market? So for me individually, I don't want to put my money all egg in one basket. I want to diversify, and for that reason I always select ETFs and index funds. I have actually made a video on that. You can see on the screen top and what are the 6 individual index funds that you can invest in. What are the assets that you are going to put money on? For me, I don't understand a lot about gold and precious metals. I may also not understand a lot about real estate, but I do understand that buying diversified assets can be great for you in future. If one doesn't work, other will work. So that is the concept. Don't put all the egg in one basket. It's the same with money. Don't put all your money in single individual stock that you really believe in. If it doesn't work out, then what you will do? So there are risks to it. For me individually, I really don't believe in one stock. I also don't believe in precious metals and gold because I don't understand that much. So what I do is I diversify my investment by buying index funds which are highly diversified. For example, Fidelity 500 index fund platform that you are using, whether it's Vanguard, Fidelity, Robinhood, Webull, you can actually utilize them to invest money for you. Just make sure that you are diversifying the stocks that you're buying or index funds that you're buying. So for me, I understand index fund more. So I invest more on index fund because it is diversified. It is not putting all the eggs in one basket, and I would like you to do the same. I would like you to make sure that you are diversifying. And I keep saying that how this downtime can actually make wealth for you. I remember in 2020, due to pandemic, market went down. There were my friends who actually bought houses at the interest rate of 2.7%, and right now it's 6.6% for mortgages. And there were cars at 0% interest rate. So a lot of people took advantage of it. One of my friends took advantage of it, and now his house have actually valued almost like 50% more than what it was in 2020. That's a crazy part in real estate right now. So the point I'm trying to make is, whenever you see bear market and whenever you see low interest rate, you should be happy that you got this wealth building opportunity. Now let's talk about potential risk and how to manage them. Number one is diversification. You cannot put all your eggs in one basket. I repeatedly told you, don't put in individual stocks. If you really believe in that company, then only you put money in one stock. And that too, I will never suggest you to put in only one stock. You always choose something which are diversified. For example, S&P 500 index fund. That is my favorite index fund. I always suggest anyone to put money on because it's well diversified. And number two is stay disciplined. Keep consistently making contribution to your investment, and that will compound over time. So compounding your investment over time, that will help you grow wealth over a long term. I also want to stress more about investing in the long term. If you think that this is a recession and it will go away in 1 year, it may not happen in 1 year, but it may happen in 5 years for sure. Another important thing is that don't get into the trap of options trading when you cannot make money and you don't have enough financial education. There are a lot of people who talk about short-term goals, that I will put money on this, it will buy calls and puts, and it will actually give me good returns. But unfortunately, more than 88% of option traders lose money. So if you don't have that much knowledge that you can really be successful in the market, then I would suggest you to stay away from it. A lot of people that I know have lost money. So options trading can be great for individuals who really understand money, who really understand what is happening in the stock market, but may not be good for every individual who is watching this video. So if you are not sitting in New York Wall Street and you don't have that much knowledge, don't put money in options trading. So your mindset should be on the long-term investment, not on the short-term investment. And now comes the realistic expectation. So by the end of this video, you know that what you can do right, what you can go wrong, what are the risks, and how you can counter that risk. At the same time, it may not happen that you will become a millionaire instantly, but rather you will set forth a pathway to become a millionaire. And why I always say that become a millionaire? Because if you made 1 million, there are 90% chance that you will make 2 million. Because it's the growth that people understand. As soon as you make 1 million, you will have all those financial concepts in your head and what I should do right to make another million. And then you will become multi-millionaire. And this is what pattern happens historically across United States. There are individuals who have made million and then they keep growing their wealth, because after a certain number, your finances explode. For example, coming to 10,000 is very hard. Coming to 100,000 is harder. But from 100,000 to a million, it's relatively easier as compared to coming till 100,000. The same way, you can become a millionaire if you set forth the right pathway. So the key strategy discussed so far is buying undervalued investments like undervalued stocks, undervalued index funds, dollar cost averaging on your investments, which you have done already, and keep it for a long term and focus on the long term potential sectors. So these are the key things we have discussed so far. And if you are serious about making money in 2025, this is a call for action. This is the time for you to start learning, strategizing, digging more deeper into the finances of companies and start investing. Start small, start smart, and set yourself for success in this market to become a millionaire. And if you have not subscribed to this channel so far and liked this video, please do that and leave your comments in the comment section below that what are the stocks that you are going to invest in. With that, I conclude this video. See you in the next video. Thank you so much for watching.